In this video, I'm going to show you the top 3 indicators that you can start using today as a beginner trader to start making profits. So let's dive into the video. Okay, so the first one on the list is EMAs. An exponential moving average is the first indicator that we're going to cover because this one is one of my favorites when I first started into day trading and has helped me bring tons and tons of profits when I was just first learning and also participating in this game. So just to get started, let's dive into where can we find the EMAs and how can we install that into our charts. So where you go is right here. Again, this goes down to where I explain on how to use TradingView. The link, it will be in the description, but let's dive into here and you can see that I already have it listed. The moving average exponential, and just to search it up, and just in case if you don't have it here, let's just type that in, EMA. And you will see that that is the first one in here, and click it, and that is just what will have installed here. So what I like to do for me, I use three special type of EMAs because each one is unique. All right, so the settings that I use would be the 9, which is already here, and now the next one is 21. All right, and all we got to do is just change the length. All right, so 21, keep it like that. And then now the other one is 55. So what the EMAs does is just pretty much, it's calculating as in what happened within the short-term period from the 9-day, the 21 days, the 55 days, past historical data. So once that all that is calculated, it pretty much just gives me what is the current trend. What is the trend on, based off price action. So in this case, I like to use the 9 for scalping. I like to use the 21 for day trading, and I like to use the 55 for short-term swing trading. So what I really do with the EMAs is I like to look for crossovers. I like to use those EMAs to see something like this. And let's keep that as in one EMA. The other one would be, let's draw a different color. Other one would be like this. The other one would be, let's just say orange, and something like that. And so the moment that price comes down to a trend to the downside, price would go underneath those EMAs. And the moment that price goes underneath, it makes this last low, because again, we're still using the structure. So if we're still using the structure, now we're using the EMAs as an extra hand. So now that we have this whole downtrend, what I like to see within structure and those EMAs being applied is I want to see those EMAs ribbons to do a crossover. So we wanted to see something like this. So the moment that price crosses, that is just where we can now see a shift in price, and those EMAs, it's going to act like some sort of support, just like that. And so now that those EMAs are indicating to go long, then go long. Get into calls, hold on to your trades, and until the trend dies off, that is just where you want to sell. So let's find an area where it gives you a whole crossover, and let's see on how you get profit off that move. So let's find an uptrend, or actually a downtrend. Let's do something like this. So let's zoom in here, and we're on a 15-minute chart right now. And actually on this one, this is just, I want to find somewhere where it gives you a whole crossover because this was just an uptrend. And let's find an area where it gave you a downtrend. And so there you go. So on the left-hand side, yeah, it was bouncing on those EMAs, and you can see on how structure has been broken to the downside. But okay, since that has been broken, I want to see another break to the downside just to confirm that this really wants to reverse. So now that it makes this new low, price comes up and then drops right back down. And so in that case, now you have another break. And so where is this low coming from? It's coming from a nice pullback in here that made that whole drop. So now study the area where those EMAs has crossed. And I'm going to put on the arrows right there. And you can see it's right here. those EMAs gave you a whole golden cross. And what that whole golden cross means is that sellers are now taken over based off this downtrend, and price should stay underneath those levels. So now that you see this low, where is this low coming from? It's coming from this high in here, because that's where they offloaded and had the strongest rejection and sold off. And look on how price came right back up into that level and sold off again. And so therefore, if I want to day trade this or look for a trade later within that week, I'm going to follow within this downtrend, because now I see major rejections, bearish structure, and now those EMAs. So what those EMAs are, again, it's just pretty much, it's a whole buy and sell signal. And the moment that price either crosses to the downside and beneath the EMAs or above the EMAs, that's just where you want to enter. So in this case, you have a cross in here. Look on how after that cross, it held on, it held on, it held on to those EMAs. And that right there is indicating that you are going to expect a bearish trend for that day, because this is one day. From here to here is one day. From here to here is another day, right? Because this is from Wednesday, this is all the way into Thursday. So you had 2 days of a downtrend, and that's underneath those EMAs. And so now look at this. Same exact thing here. Look on how price was making highs, lows, highs, lows. EMAs has crossed over. And the moment that crossed over, look on how price came up, came back down, and then there you go. A nice buy entry to go long. So the moment that price comes above an EMA, look for the retest. And after the retest, when it hits the EMA, that's where you can enter to go long to take out their previous high. Because look at this, it came up off of that level, came right back down, and then bounced off the EMA, and you could have got a couple of points off that move before the trend continued. Let's find another one. Look on how price came down, came right back up, rejected those EMAs, and then sold off. Nice rejections. So again, support and resistance. So treat this as some sort of cloud, or treat it as some sort of roof that when you hit some sort of roof or ceiling, you reject. And now think about the opposite. Think about the opposite as in, now that you have a crazy sell-off, now you want to start looking for upside. And now it's like you're just waiting for that whole crossover. You had a crossover right here. And after that crossover, look on how the trend held short term and was bouncing on those EMAs and gave you a nice, what? Buy setup to go long to fill in what? Maybe these imbalances. There you go. So now let's look for a downtrend, and let's find where did price go beneath those EMAs right here. And now that right there indicated you to look for downside, all you got to do is just go down, wait for the retest off those EMAs, find your confirmations in here to go short. And look at this, nice short-term swings to the downside. Now let's look at the reversal. Look on how price came up, came back down, bouncing on those EMAs, came up, and then sold off, right? Lower low, lower high, lower low, lower high, lower low. Consolidate, consolidate. Gave you a cross right here, bet in the market to go up. Gave you a cross right here, bet in the market to go down. Came up, came down, came up, trend continuation. And there you go. EMAs is something that's going to help you and improve you drastically in the way that you trade. So start applying these EMAs, because EMAs can pretty much be like a whole another type of confluence that you can use when it comes down to you trading. So look for those crosses. They're all over these charts. And once you find that cross, find a way to get in based off the direction, either for the upside or for the downside, and make those gains. Now the second indicator. The second indicator is called the no gap candle indicator. That indicator helps me fill in those gaps and help me find supply and demand. So let me show you how. So let's go into a blink chart and let's go to Home Depot. So you can see it on Home Depot on this 15-minute chart. What do you have right there? Gap. What do you have right here? Gap. What do you have right here? Gap. What do you have right here? Gap. What do you have? Let's find another one. What do you have right here? Gap. What do you have right here? Gap. So for me to fill in those gaps and for me to not be confused within those gaps is let me fill those in. And how do you fill those in? Click on your chart, click on your indicators, and now type in no gap candles, and you can see I already have it right here. So again, no gap candles. And once you click that, it fills in all the gaps in what we just labeled out. That right there helps my eyes to see how can I draw supply and demand, because that's the way that I like to trade, supply and demand. Look on how price comes into those gaps and sells off. So gaps is we're pretty much looking for price to come into those areas and then to look for rejection right back down, because the moment that price fills in those gaps, we expect some sort of retracement. Same thing right here. The gap that we just point an arrow at, look on how price came into that gap, filled in that gap, nice trade. So again, that's another indicator for you to start making money in this game to make thousands, if not millions of dollars. So let's find the other gap right here. And we are currently holding on that gap. And there you go. Look at that. Nice gap. And now look at this. This whole gap that we have left behind within the last day, we expect what? Price to come up into those levels to see something like this, to fill in that gap. And that's just where we can bet on the market to go to fill in that gap. So for tomorrow, we can say Home Depot is going to go long if we see nice bullish momentum to fill in that gap. So it's a nice indicator. It's a nice indicator for you to start using and how you can fill in those blank empty areas. So now the third indicator. The third indicator is a watermark. And I like to use these watermarks because it helps me see the time frames that I'm in. Also labels out what stock, indice, Forex pair, crypto pair that I'm looking at. And if I want to share my chart to my friends or maybe to my team or my group, then I can use that watermark to show my students what am I looking at. So there you go. So this whole watermark right here is, we can open this up and we can put in the inputs, and there we have it. So we can put this in the middle and we can say that, let's center it, and you can see the position. We put in the middle, center, and let's make it huge, and let's make it dark, just like that. So actually we want them at the bottom, not in the middle, and there you go. So we'll do RZ, show prefix, no, because we want to remove the bats, and there you go. So now it's like, if you're marking up anything and you don't want nobody to steal your charts, then put this whole watermark on and nobody will steal your charts. You can use that for, again, for you to share your friends what you're looking at, and share to make these gains. Share what we can look at off your charts. Let's see what you got. If your levels are good, then let me use your levels so we can start, making profits together. So those are my top 3 indicators that I recommend you to start using right now, because one of these indicators can be the whole game changer that you need for you to start generating those profits. But before you go, I'm running a 7-day free trial for my Discord, and if you want to be part of that, that link will be found in the description of this video. But like this up, comment what you want to see next, and I'll catch you on the next video. Peace.